Hello, and welcome to On Watch by MarketWatch. I'm Jeremy Owens. If you're anything like me, you have a task on your schedule this weekend: taxes. Tax day is Monday, and while procrastinators like myself have work to do, many people have already filed. Early returns show that Americans are receiving larger refunds this year, but that may not be good news. We'll talk about that and more with MarketWatch's tax guy, Andrew Keshner. Then, our Financial Literacy Month coverage continues. Beth Pinsker is a certified financial planner, but she says that if you're not a millionaire, you probably don't need a financial planner. Instead, she'll tell you how to do the same thing on the cheap. Plus, we'll take a quick look at the news stories we're watching right now and how they'll affect your wallet. First, let's talk taxes. High inflation and pandemic payouts have been the biggest stories of tax season in recent years. While inflation has tamed a bit and most of us haven't received COVID relief funds for a couple years, they are still an issue as we reach tax day in 2024. Andrew Keshner joins us now to talk about how inflation is producing bigger refunds and your last chance for a pandemic relief check. So, Andrew, it's almost your day to shine. Tax day is coming up on Monday. You're our tax guy. So let's talk about what we expect from this year's tax day. The biggest thing to talk about is bigger refunds. We do expect to see an increase in the amount of refunds people are getting. Can you explain to us why our refunds may trend higher this year?
Yeah, so far, at least through middle of March or so, what we're seeing is a refund amount that is about 6% higher than last year at this time. And that got me thinking, what's going on here? Congress has not passed any laws that would be pumping up refunds on average this year. And so that's one thing that's out. I mean, certainly there's some relatively new credits out there from the Inflation Reduction Act. But what it really got me thinking about is the fact that every year there's about 60 parts of the tax code that get adjusted for inflation. And it got me thinking that the inflation adjustments to the tax code moved higher than our wages, in the grand scheme of things.
Yeah, and that's not exactly a fun thing for people to think about, is like you're getting a bigger refund because you didn't get a big enough raise and your wages did not match the pace of inflation.
Yeah, so let me just put it in perspective for you. So the taxes that we are filing through April 15th, these are for year 2023. And in the way back when machine, when the IRS was figuring out the yearly inflation adjustments, it was working on a lot of data from 2022 when inflation was just smoking hot.
Skyrocketing.
Red hot, white hot. And so that informed their calculations, and they raised things like the standard deduction and the tax brackets by 7%. So if you had a raise of 7% or so, then you're
right there on it.
You break even. But if you didn't, you're getting taxed a little less, which is, again, that sounds cool on one level.
But the reason for it ain't that cool. And we've talked about this a lot in terms of the wages in America have increased over the past couple of years, but most of the increase has been on the lower rung of the salary scale. But higher up the scale, especially in the middle, for the middle class, you might not have gotten those wage gains, and you'll see a larger return this year if that's the case. And the other newest thing this year about tax day is that the IRS is offering its own free file system in a dozen states that is actually free for all users to challenge TurboTax and some of these others that are free for just a subset of Americans. Now, this is available in California. I plan to use it, but I have not done my taxes yet because, like every good journalist, I am waiting right up till the deadline to get my work done. But you have talked to some people who have tried this new system. What have you kind of heard from them on what it's like for those who may be looking to use it this weekend to go ahead and get their taxes done?
God bless the IRS. People love to hate, but people I talked to about this IRS direct file system, they were like, this is great. I mean, some people had some quibbles. Some things are like, well, this should have been a little bit better, or...
I'm sure the interface isn't great. It's a government website.
Actually, what they said was it's very straight ahead. I think simple and straightforward was kind of the vibe I got, and fast. That was another thing that came through. I mean, the numbers that I heard from people were like, I got my federal return done in 15 minutes. I heard 30 to 40 minutes.
I'm going to free up my weekend now that I know it's going to be super fast, Andrew.
Yeah, you could still, do all your various hobbies in, all your podcasting and
right. My Little League coaching is not going to be put aside for my taxes this weekend. Thank goodness.
Here's like one quibble that I heard from one person saying, the IRS has all my stuff already. And here I am filling out this blank field of this is the number that I made, but the IRS already knows the number. So it seems like
right. You get your W-2 and then you have to go in and fill all the information from the W-2 out in a form with the group that already has that W-2 on file, basically.
Exactly. What's going to be really interesting is if this lives to see another tax season. Treasury Secretary Janet Yellen, she was in a recent Senate Finance hearing, and she was asked about this, and she said, we're going to consider the data. IRS Commissioner Dana Werfel has said the same thing, but she said if there's interest in it, we'd love to expand it. And of course, we have a presidential election. I'd be curious to know if President Trump would be into IRS direct file. So there's a lot of question marks here.
One other interesting aspect of this specific tax day is that we're reaching the deadline for receiving any stimulus payments you may have missed during the pandemic. Now, this tax day has always been used for this. The deadline is about a month after, about May 17th. But you typically want to do this bundled with your taxes, right, Andrew?
Well, you have to file a tax return for that year in order to claim that unclaimed money or the rest of that amount that you're owed. I mean, let's rewind back to March 2020.
Oh, please no.
Yeah, I know. I'm sorry. I like cringe as I say that.
Yeah. You're giving me flashbacks here, man. I don't want to go back to that time.
Okay, but the money, billions of dollars doled out, but there were people who didn't get all the amount that they were owed, or changes in their household. A child was born after the payments hit. The IRS didn't know about it. The way that the IRS squared it up with you was through you had to file a tax return claiming the rest of what was owed to you. And that was called the recovery rebate credit. The IRS says that there's 940,000 households that are still due a refund.
So almost 1 million households have not gotten their rebates, not gotten their pandemic payouts, basically.
They're only talking about the refund money from other parts of the tax code. They're not even putting it out there as far as how many are still owed pandemic payouts from this first and second round. But it's safe to assume that if there's a refund coming to you that you just need to claim and put into a tax return, that there could also be stimulus payments as well in addition to that. So that $1 billion is just refund money. It's not even the pandemic payout money.
And we do know that we're talking about taxes broadly here, and most people have specific questions. We do have a column called Tax Guy that Andrew sometimes takes care of. Andrew, how do we get in touch with you if the readers do have questions about their taxes?
You can hit me up at akeshner@marketwatch.com. Love to hear from you. Sometimes I feel bad. True confession is I can't get to everything, but I love to hear them, and I get to as many as I can.
Yeah, so if you have questions, hit up Andrew for a potential Tax Guy column. And Andrew, good luck getting through this tax day and all the questions you're bound to receive. And we'll talk to you again soon.
Well, more like good luck to you. Time to get on those taxes, Jeremy.
All right. Thanks again, Andrew. We're going to take a quick break. Coming up, financial planning if you're not a millionaire. Stay with us. Welcome back to On Watch by MarketWatch. Before the break, we talked with Andrew Keshner about taxes. Now we turn to Beth Pinsker, MarketWatch's financial planning columnist. I was shocked when Beth told me that financial planners likely don't want clients who aren't millionaires, and most non-millionaires don't need them anyway. After all, she is a financial planner. So for a Financial Literacy Month segment, I asked her to come on and explain why that is and what the rest of us should do instead. Beth, welcome. Please explain this for me.
The financial planning industry is really not set up for the little guy. Financial planners, when they work at this full time and are not journalists primarily like me, they work mostly on what's called an asset under management fee, which is typically around 1%, but can fluctuate up and down from that point. And if you have $1 million, that's $10,000 a year. If you have $1,000, it's, $10 a year.
$10, yeah.
The thing is that it's not worth it for you to pay $10 out of your $1,000 to get financial advice because you're eating into your returns and it's too big of a price for you to pay. At the same time, that $10 is not enough money for the financial planner to cover their overhead, to cover their insurances, and to make any money for themselves. And so unless you have a certain amount of money that justifies the financial advisor's fee, the reality is they don't want the engagement and you can't afford the engagement. So if you're looking for financial advice, you have to start looking other places to find it.
Right. So what other places should somebody be looking for, and what should they be doing to kind of start planning for themselves without the help of a financial planner?
Well, the first thing you want to do is see if there are any resources at your disposal, either through work or through the custodian who holds your accounts. So say you have a 401k plan at work. Those 401k plans often come with a half-hour Zoom session or a half-hour webinar that you can attend with a representative of the company that your 401k is held with. Say it's one of the big brokerage houses like Fidelity or Vanguard or Voya or any of those places. It's really free. It's paid for by your employer as part of their service contract with whoever it is that they engage with. And you can go and get a half hour of chat time with somebody who can answer some of your questions. That person will likely be a certified financial planner or have various other securities licenses. They'll be somewhat of a fiduciary because they're working on behalf of the 401k plan, which is working in your best interest. If you have a rollover IRA or a taxable brokerage account of some kind, you can find something similar sometimes at those brokerage houses where you can just call up and get some advice on a specific topic. It's kind of like the urgent care of financial planning. So you don't know what you're going to get, and you can't guarantee you're going to get the same person, but typically you can get a person on the line to answer a specific question.
Right. And then what you're trying to do early on as you're starting this journey is just to sit down and say, this is what I want. This is the amount of money I want. This is what I want to do. Like there is a very general start to financial planning that can be done in a lot of different ways, right?
What you want to do is take stock in a very systematic way. And you can find guidance on the internet of the 5 pillars of financial planning, which are retirement, taxes, insurance, and so forth. And you need to know your income. You need to know your liabilities. You need to sort of add all those things up in a way that gets you to a bottom line. When most people think about financial planning, they're thinking about the allocation of the money in their accounts. What ETFs should I buy? What mutual fund should I buy? But it's really much more than that. And that like allocation part is the easiest part of it. And if all you need to know is whether I should buy this ETF or that ETF, you can just do a Google search and just go in and buy it. And to be honest, at the bottom line, it doesn't really even matter which one you buy, as long as you buy one of them.
Right. Yeah. Just making sure that you have something that you feel you put aside, right? And breaking this down to what you need for your living expenses, what you have left over and how you can make that money make money for you, or what your goals are and how you can get there knowing what your living expenses are, basically.
Yes. And you can do all of this in most banking or brokerage house interfaces. Like they'll allow you to organize your finances by buckets. And you can do it on a spreadsheet. You can do it on money management software. You can do it on a piece of paper. I mean, I was sorting through my mom's papers the other day, and I found her scratch paper where she tried to like map out a financial plan for herself. back in the 70s. And it was like a pretty good financial plan just on a piece of paper. And that's really all you need. You need like, this is my retirement savings today. This is my money in the bank today. And this is what it's likely to be 30 years from now when I retire. And you can use an online calculator very easily to figure those things out. And then you go to your expenses and you write down, this is how much I spend today. And then you can go to that column that's like 30 years in the future and say, this is how much I think I'll spend in the future. And you want the top part of it where you have your savings to add up to more than the spending that you have allotted for yourself at the bottom. And in a very rudimentary way, if your income is greater than your expenses, you're going to do okay in the end.
Just sitting down and starting that plan is the hardest thing, I think, for a lot of people, right, Beth?
You have to write it down. It has to be like intentional. If it's just a vague idea that's swirling around in your head, it can get easily corrupted by other daily needs that you have. Like if you say you have money set aside for retirement, but it's in the same account as your normal spending, you're likely to spend that money on a vacation and it'll be gone before you get to retirement. You need your retirement money separate, and you need a financial plan that's written down on a piece of paper that you trust and can refer to. And it's concrete. You don't want to just leave it as a nebulous sort of, oh, I'm saving generally for retirement and I have a general idea of what I should do.
But yeah, a lot of that is then how you set it up, and especially with the different accounts. If you have just a simple checking account and you're saying, well, I'm putting this part of it aside, and then you have a need and you just use it. But if you had put that in a different savings account, if you had purchased a T-bill with it, if you had done, a couple of different things, then that's the difference that will keep you from going against this nebulous plan you may have.
Yeah, financial advisors usually refer to it as a bucket strategy. And that seems to make a lot of sense to people. And sometimes they'll even do visualizations with actual buckets. You can do these buckets by type of account or goals, or you can do it by time. You can say, this is my short-term money, this is my medium-term money, this is my long-term money. You can say, this is my spending for retirement, this is my spending for my house, this is my spending for college. You just put them in different categories. This is my taxable brokerage, my tax-deferred retirement account, and my, tax-free Roth account.
And there are definitely places to go besides a financial planner when you're trying to figure these out. I mean, I wouldn't suggest taking anybody on YouTube or TikTok's word for everything. But how do you suggest people kind of talk through this, think through this when they're trying to adjust or really put down their financial plan for the first time?
Yeah, everybody needs like that friend they have who knows about money. Like you need that friend who will look at the weird mole on the back of your neck, who's the doctor. We all need somebody to ask our silly questions of, or the questions that we think are silly, but that probably aren't silly at all. And it's hard to find that person. I'm that person for a lot of people.
My big sister is that person for me, right? We've always gone back and forth on this stuff. She's, a few years older than me, so she's been through a lot of the things that I go through, right? And now it's my spouse a lot of the times. We are the ones who are both affected by this, and we get to talk through like how we do things.
Yeah, so I mean, the best approximation of that, if you don't have anybody, is if you have a little bit of money you're willing to put towards it, you can hire a financial planner on an hourly basis. If you just have a few questions, you just want to check things by somebody, instead of paying a yearly fee based on your assets, you could just pay their hourly rate. You can read and educate yourself on the internet and apply your situation to the general situations that come up. So for instance, a perennial question out there is, what age should I take Social Security? It's different for everybody. The answer is that perennial favorite. It depends. But if you want to know how much you should consider what your situation is, like if you want to figure out what you in your situation should do and get some personal advice on that, there are like specific programs out there that can help steer you towards the right answer. Some of them are free, some of them are paid. But if you only want an answer to that one question, there's specific resources for that. If your question is, how much house can I afford? How am I going to pay for college? You can go looking for specific calculators and specific resources on those particular topics. And you don't have to get the holistic plan from one place where you have to pay for it.
And of course, you can always read MarketWatch. We're always talking about things like this. Beth writes all the time on how to plan for your finances. Thank you so much for joining us, Beth, and we'll talk to you again soon.
Thank you.
Before we go, it's time for What We're Watching, a look at the news you need to know for the rest of the week and beyond. Inflation continued to increase in March, according to Consumer Price Index figures. They showed prices growing 3.5% from the same time last year. The cost of gasoline, car insurance, clothes, and rent jumped in March, the third consecutive month of inflation rates exceeding economists' expectations. Treasury rates shot up in response, which means good deals on bonds are still around, though stocks were slammed. The opposite moves by stocks and Treasury yields reflect fresh doubts that the Federal Reserve will cut rates anytime soon. Expectations for a June interest rate reduction by the Fed are now moving towards September, just 2 months before the presidential election. In the minutes of their latest meeting, released yesterday, Fed officials reiterated that it would not be appropriate to cut interest rates without strong proof that inflation is moving toward their preferred 2% target. Earnings season begins this week, with the big banks detailing their financial performance in the first 3 months of the year. And the news may not be good. With interest rates staying high, banks could struggle as the debt they hold at lower interest rates loses value and fewer loans come in with the higher rates. Bank stocks have performed well so far this year as IPOs and mergers have bounced back, but these reports could turn that around. And that's it for this episode. Thanks to Beth and Andrew for joining us. To keep following the latest on taxes and Financial Literacy Month, head to MarketWatch.com. You can subscribe to this show wherever you get your podcasts, and please do. If you like what you heard, please leave us a rating or review. It really helps others discover the show. And let us know what you want to hear from us. You can reach us at onwatch@marketwatch.com, and we'd love to hear what topics you would want us to look into for Financial Literacy Month. The show is hosted by me, Jeremy Owens, and produced by Meta Lutzhoft and Jackson Cantrell. Isaac Gaines mixed this episode. Melissa Haggerty is the executive producer. We'll be back next week with a new episode, and until then, we'll be watching.